Stop changing your trading strategy. Why your trading strategy suddenly stopped working? It's not what you think. Have you ever deleted a trading strategy after just two or three losing trades? Be honest. Most traders have done it. You take a few losses and immediately think this strategy does not work anymore. So you start searching for a new one. A few days later, the new strategy also starts giving losses. Then another strategy, and then another, and another. Does this sound familiar? Here is the truth. Your strategy may not be the problem at all. The market changed, not your strategy. And this single mistake keeps thousands of traders stuck in the same cycle for years. Today, let's understand how to know whether your strategy has actually stopped working or whether you are simply trading it in the wrong market. Let's forget trading for a moment. Imagine it's a raining heavy outside. You take an umbrella and it protects you perfectly. A few months later, it's the middle of summer. You open the same umbrella to protect yourself from the sun. Now, does that mean the umbrella is bad? Of course not. The weather has been changed. The umbrella didn't. Trading strategy works exactly the same way. Sometimes it's not your strategy, it's the market environment that has changed. Many people believe the market behaves the same way every day, but it does not. Some days buyers completely control the market, some days sellers dominate. Sometimes the market moves strongly in one direction, other times it spends the whole day moving in a small range. And sometimes volatility suddenly explodes. Now think about this. If your strategy was designed for a strong trending market, how can you expect it to perform the same way? Inside a sideways market, it can't. And if your strategy works best when the market moves in a range, a strong trend may produce several losing trades. That does not automatically mean your strategy has failed. It may simply mean you are using the right tool at the wrong time. Now, let me tell you the biggest mistake most traders make. After two losses, they stop trusting the strategy. After three losses, they stop using it completely without asking a single important question: what kind of market and I am trading today? Instead, they immediately download or buy another strategy. This cycle repeats: a few winning trades, a few losing trades, another strategy, year pass, but nothing really changes. Professional traders think differently. They don't expect every trade to be profitable. They already know that losses are part of the business. So instead of asking why did this trade lose, they ask did the market conditions changed? That one question can completely change the way you trade forever. Before you decide to throw away your current strategy, ask yourself three questions. First, what type of market was this strategy built for? Trending, sideways, high volatility, or low volatility. Second, how many losing trades are considered normal for this strategy? Every successful strategy goes through losing periods. If you don't know that, you may quit just before the strategy starts performing again. Third, have you actually tested 50 or even 100 tests before judging it? Or are you making a decision based on just two or three bad tests? Professionals don't judge strategy using emotions, they use data. There is no strategy that works every single day in every market. The goal is not to keep finding new strategies. The goal is to understand when your current strategy has an advantage and when the market is telling you to stay patient. Once you understand that, you will stop chasing the next strategy and start becoming a better trader. If this video made you think differently, hit the likes button and subscribe, follow to No Chart Finance now, and tell me in the comments part 2. In the next video, I'll explain how to identify whether today's market is trending or sideways before placing your very first trade.